U.S. economy is defying expectations, but shadows of uncertainty loom large. While recent data shows growth picking up steam, experts warn that the road ahead is anything but clear. From shifting trade policies to the lingering effects of tariffs, the nation's financial health remains a puzzle with missing pieces. And here's where it gets controversial. Can this growth last? Or is it built on shaky foundations? Let's break it down. Last week's revised GDP report painted a surprising picture. The economy grew at a 3.8% annual rate in Q2, far exceeding the initial 3% estimate. This surge was fueled by consumers splurging on dining out, travel, and other services, while businesses poured money into AI-related tech and equipment. But don't get too excited yet. Just months earlier, the economy contracted by 0.6% in Q1, partly due to companies stockpiling goods to avoid President Trump's looming tariffs. Now, with those tariffs fully in effect, the question is whether this rebound is sustainable or just a temporary rebound. The Federal Reserve finds itself in a tricky spot. On one hand, a cooling job market has pushed unemployment claims upward, and hiring slowed to just 22,000 jobs in August, part of a worrying trend after a rare net job loss in June. On the other, stubborn inflation and robust growth suggests the central bank might hesitate to slash rates again. The Fed did cut interest rates by a quarter point in September, marking its first reduction in nearly a year. But traders are betting on another cut in October. The catch? Balancing inflation control with job market support is no easy task, especially when the effects of today's decisions won't be felt for months. Ryan Young, an economist at the Competitive Enterprise Institute, sums it up. Since the pandemic, the Fed has prioritized taming inflation, even if it means higher rates. Now, with the labor market faltering, they're pivoting towards stimulus. But will that shift come too late? The answer may depend on who's paying the bills. Right now, wealthier Americans are driving much of the spending, while middle and lower income households are tapping credit and draining savings to keep up. If that trend continues, companies might struggle to absorb rising costs from tariffs, especially if consumers suddenly tighten their belts. And here's the part most people miss. The real test isn't just about numbers. It's about psychology. Tariffs have already sent shockwaves through industries, and while businesses have weathered the storm so far, there's no guarantee they'll keep absorbing the pain. As one Fed official noted, we're navigating uncharted territory. Every decision carries risks. So what's next? Will the Fed's cautious approach prevent a recession? Or could it fuel another round of inflation? And should policymakers prioritize jobs over price stability? Even if it means higher debt costs for Americans, we'd love to hear your take. Do you think the Fed should cut rates aggressively to boost employment or hold the line to curb inflation? Share your thoughts in the comments below. After all, the future of the economy isn't just about data, it's about choices, and those choices belong to us all.